So today I want to continue talking about Trulieve. Trulieve, in case you don't know it, is a cannabis company. It is also a position of mine. And yesterday I posted a video about it, reviewing its last quarter results. I also answered a question one of you guys sent me about at what price I would be interested in selling my shares. And well, basically, my answer is that I don't have any price target in mind, My initial plan is to simply hold my shares, my Trulieve shares, while the cannabis market develops. So, my initial plan is to hold my shares, my Trulieve shares, for years if needed. However, with that said, if Trulieve started trading at an extreme valuation, for example, at 10 times revenue, then I would seriously consider selling my position. At 10 times revenue, I think selling Trulieve would be an excellent deal. Yes, I think that a multiple of 10 times revenue is quite high for a company like Trulieve. After all, it's a commodity company, right? But as I said in my previous video, that's what I'm interested in, right? I want to sell my companies at a high price. Otherwise, I simply prefer to keep them, right? But anyway, today I want to talk about Trulieve's current valuation. But you see, in my view, I believe that Trulieve stock is still very cheap, even after the recent price surge. I think that Trulieve stock went up over 100% since its bottom. But even so, I think that Trulieve is still very cheap. Because, you were paying a multiple of only 1.5 times revenue for a company that is showing simply excellent numbers. If you look at it, you will see that Trulieve is delivering a gross margin of 60%. 60%. That's the kind of margin technology companies show, okay? Besides, Trulieve is also showing an operating margin of 17%, which is simply excellent, right? But that's what the company posted last quarter. On top of that, Trulieve also delivered an operating cash flow margin of almost 30%. 30%, that's phenomenal, okay? So yeah, Trulieve stock is still very cheap because you're basically paying a ridiculously low multiple for a company that's delivering, at least in my view, right, simply excellent numbers. Now, it's true that Trulieve is still not profitable yet. However, that's because of Section 280E, which forbids cannabis companies from deducting almost all of their operating expenses for tax purposes. So basically, cannabis companies pay taxes on their gross profits, okay? Which for me is simply absurd. However, with cannabis rescheduled, that will change. So once that happens, I believe that Trulieve will start posting strong net profits. That's my expectation, because it will simply stop paying such abusive taxes. But in any case, even though Trulieve is not profitable yet, the truth is that this company is already showing very good numbers in my opinion, and yet it is still trading for peanuts. As we've seen, it is only trading at 1.5 times revenue. But you know what? I can easily see this company trading at, for example, 5 times revenue, not to mention higher numbers, okay? Especially if Trulieve starts showing growth again, and especially if cannabis gets rescheduled. Then we could start saying out of this world valuations, okay? So that's all I wanted to say today. For me, Trulieve is still a very cheap stock.